let me first of all welcome you, everybody. We are going right now to a panel discussion which is called CFO Talks. Let me give you a little bit of background on this CFO Talks. It is a Romanian community online event that we started some months ago at the beginning of the year because we understood that the financial specialists need to understand different topics in relation from their day-to-day work in relation with the new trends in technology. And we started this CFO talks. We had previous editions. Let me just tell you, the first edition was with PwC on with the PwC as a partner on multi-entity management. So how can you and how make more efficient a multi-entity management in a group of companies from the financial point of view? Then it was about transfer pricing, which is a hot topic always for financial people because of the regulatory burden and fiscal implications of the transfer pricing situation. We had another CFO talk with BT Capital Partners on issuing bonds on stock exchange, on public stock exchange. I know it's not the time for these kind of talks right now with the current market status. But there is a subject that we wanted to approach, and this subject it is ESG, environmental, social, and governance. ESG. This is what it stands for. Is like the and today we want to do the first in English. By the way, the first in English edition of CFO Talks about ESG, about the green funding. And as always, we have some very special guests. First of all, it is the partners from today are IFC, who is keen to promote as much as possible the green funding. Also, we'll have a case study, let's say, but Adela Tapurin from NEPI Rockcastle, Group CFO, Group Treasurer NEPI Rockcastle, will give us a case study on their last funding, green funding that they did. And also we have a very special guest from UK, Eleanor Hill, editor from Treasury Management International. Thank you very much for being here, guys.
It's a pleasure. Thank you, Cogman. Thank you.
Thank you. Okay, so
thank you.
So I will start this discussion first of all. If it's like from the basis, because although a lot of people are speaking about ESG, about green funding, can you help me to understand me as an outsider of this topic somehow? Can you help me to understand when it appeared in this financial? I thought it is a Greenpeace thematic. Yeah, so it's like when the CFOs and the treasurers started to think about the consumption of cow meat. Yeah, so maybe Christy, you can start with this.
Thank you, Cosmin. I know it's not probably the most expected topic for this event, but it's very important for us, at least as a part of the World Bank Group. We've done recently a study, a report called the CCDR, Climate Change Development Report, which will become public soon for Romania. And everything started with the goals assumed by the European Union, which to go to the end, 2050, net zero. That created a huge need for financing, for green financing, for decarbonization. It is estimated that for Romania, between 2023 and 2050, Romania will need $400 billion to finance these activities, to finance this transition to net zero. And that represents, if I remember well, 2.9% of the cumulative GDP for the next years until 2050, which is a huge amount. On top of that, between 65 and 80% of this amount will be provided by the private sector. So even if we think that now we have this NRRP, which is providing Romania with roughly 29 billion of euro, and half of that amount is for green transition, this is almost nothing compared with the real needs. So, and just to complete the picture, currently the financial institutions in Romania have only 3% green financing in their books, which means, and this is, by the way, half of the European Union level, but it's still a long way to go to meet all the needs. So this is the reason why we started to discuss about this. And you will hear it more and more often from now.
When I worked from G Capital, it was this responsible lending that I heard about within the company, and it seems to me like a very pragmatic way to do responsible lending at the global scale. So we bankers are really caring, and we want to finance this transition of the humanity to a better world. Eleanor.
Cosmin, you asked about when did CFOs and treasurers get interested in ESG, and they're not all interested in ESG. I'm just going to say that there's a lot of naysayers, there's a lot of non-believers, there's a lot of, oh, it's a load of greenwashing, it's a load of marketing. And yes, there's some huge issues with that. But over the last 5 years or so, it has become one of the top things that we're asked about as a provider of Treasury information. It's the most searched term on our website at the moment. Our most downloaded handbook is on ESG. And it's the important thing to understand is it's not just green bonds. There's an awful lot that you can do. There's green investments, there's the digitization side of things, but also the governance side of things. So people quite often look at the E and the S, maybe looking at their supply chain and going down sustainable supply chain finance. But if you think about the governance side of things, there's things like the FX Global Code of Conduct, which is coming out. Corporates are signing up to this to ensure that you're getting best execution in your FX, etc. Actually, that falls under the G pillar. So there's a lot of things that treasurers can do under ESG and show their value and help organizations reach the UN Sustainable Development Goals that aren't the wishy-washy area of things that some people don't like. So there's a lot of different areas that people can get involved in, and it's absolutely the number one thing we're being asked about.
It's my duty to get from this macroeconomic thing to asking a company which has its own agenda to make money for the shareholders, why this company will think of this ecologic hipster movement.
I would say that there are a lot of triggers that are coming for assessing the ESG risks, and these are also from the regulators and from the investors, because all stakeholders are putting more and more emphasis on the ESG. Also, in NEPI, and just to give now an example, we put it on our agenda ESG back in 2018, 2019. And actually in 2019, we get our first ESG rating by Sustainalytics. Indeed, it was easy because we were a listed company, and also we had an investment credit.
Stop. How is this? So somebody is checking the quantity of meat in your company, or
no? I mean, we are in a real estate sector, and if we are if we want to understand the impact of the built environment on the carbon footprint, actually it represents 40% of the global carbon footprint. And if we this percentage actually increases to 70 in the big cities. So we are discussing about a sector which needs to go on the decarbonization path. Also, I was reading that 70% of the existing built stock will remain in the big cities in 2050. So that means that there will be a lot of money involved in the decarbonization of the existing built environment. And it was estimated that only for the next decade alone, there will be necessary $5.2 trillion for decarbonization. It is a very expensive problem.
It is a very expensive problem, and I understand this from a real estate company. It is in the core of its business, but still, the there is the regulator, okay, asking for this, and then there is, but still that there should be some incentives. So this, how come these incentives are coming to your company so that you can convince your board to take this type of
Well, I will explain it in two ways. One, as a financial institution, if you are a bank or any kind of financial institution, you have exposure to all kinds of climate risks in different ways, either through your clients, either through your building, either to the whole environment where you are acting, you are working. So all these things eventually are quantifiable in money, including, for example, the risk profile of your clients, if you are a financial institution, which transpose in a risk weighted capital and things like that. So they all have eventually a financial component. Secondly, if you are a regular manufacturing company or whatever, you have pressure from the suppliers, you have pressure from your clients to become more and more,
because they want to become more and more
because
ESG.
because everybody wants to be
Yeah,
more
it's
responsible.
it's like
They
a
are
network
putting
effect.
pressure. Exactly. And we have done, again, a study on our clients, for example, and it has proven that all the clients which have good performance, ESG performance, they perform better financially than the same type of clients which have poor ESG. Uh, this is not something very obvious in
Yeah.
the beginning, but if you look into the figures, if you look into the experience, then you realize that there is no other way to do it.
I'm going back to Eleanor, and then go back to you, Adela, because I want to get very deep
Different
down
perspective.
but
Yeah.
I want to ask you something, Eleanor. So you see it also, you interact with a lot of treasurer, with a lot of financial managers globally. And you just mentioned that not everybody is in this religion.
hmm
What are the counter argument of the ones that are not in this religion in getting not getting into
I
it?
would say that the number one is greenwashing. You know, people are very, very skeptical about ESG products generally, and there is a huge amount of greenwashing. And so people have personal beliefs that it's just a load of rubbish, so they're not interested in it, but they are being dragged into the future by their organizations. And to add,
It's like quanon religion. So it's like called global conspiration that puts us the mask and wants to make us ecologists, or this kind of things.
yeah, they just don't have a personal interest in it. And I think one of the things to make a success of ESG within Treasury, finance, whatever, is to have an ESG champion. And if you're trying to get people interested in something that they're not personally interested in, or they think is a load of baloney and it's all kind of blown off greenwashing, then they're not going to be interested in it. But there are also issues with the ESG products that the banks have, and this is holding people back as well. So the ESG products are quite nascent, but a lot of them are also just, treasurers feel like they're just being labeled as ESG products, and there's not actually a lot of ESG about it. And the onus is on the corporate to be doing the sustainability activity, and the bank is doing absolutely bugger all. in terms of being sustainable themselves. So it's like a kind of situation where they don't feel it's the right dynamic.
Playing also the devil's advocate, the devil's part. So I remember me and you in Bratislava some years ago with the bank presenting their ESG implementation, and one of the things that they presented it is some employees of them saying that they are eating less cow meat. I'm going back to less cow meat, so not each and every day, but only twice per week. So we are doing as a, and when you see this, everyone says, "Come on, guys!" So this is something that a conference for treasury management should have on the screen. So we are there, and you remember.
I remember the woman with a reusable coffee cup, and that was her big thing in the presentation.
So a bank, we don't know, we don't tell the bank anyway, saying that their employee, the bank is more and more ESG because they are reusing the coffee cups. Come on, going back. And I want to go down to earth because it's CFO Talks, and here we want to be very specific. Adela, so if a company, because we are speaking to medium to high companies in Romania and maybe in Central and Eastern Europe, how they should definitely proceed in considering and then implementing some specific financial decision on ESG. Yeah.
Of course, I believe that the first step is just to understand the business model you are operating in and to see, in each categories what we are doing, what you have as a green assets, if you have this one, or if not, you should start to do something, and on social and on governance. I would say that ESG, of course, as an acronym is new, but before we had corporate social responsibility. So we had in the area, but of course it was not so much emphasis on the environment. Now the environment is also becoming an important part, but it's not the only one. Also the social and the economic implications are also there. I can give the example of NEPI because we, as I mentioned, we looked back.
Please do. That's the point.
Indeed, we looked back in 2019, and I would say that the good intentions should be channeled into some achievable targets. And for this, you need partnership, and you need partnership with people that know what you can do in the ESG area. And here we had the partnership with IFC. We had partnerships with the banks, with Societe Generale and ING, that helped us in drafting our green financing framework. We had partnership with ESG rating agencies, Sustainalytics and ISS.
So you okay? Let's be more ESG. And then you go to your partners, to your corporate banking partners. Say, guys, I don't know. I can reuse the coffee cups a lot, but I want to be more ESG. And then the banking partners are coming to you and say, good, we need to have a assessment of your segments of the business, which are the biggest ESG, let's say, related areas, and then work on this. Okay.
So I would say that this is at first a very important step. And the second one is you need to have a transformative mindset. You need to rethink the way you are doing the business, because as Cristi mentioned, sustainability goes hand in hand with the financial performance. And if you want to be in the business in the future, you cannot disconnect them. I don't think that there will be a way back on this.
Okay, so you do this. First of all, you start to get specialized advisory, and then you reshape your business framework.
And you are starting to work to an ESG strategy, and you are working on a roadmap with clear action points, with clear principles, with clear technologies that you want to implement year to year in order to achieve the KPIs.
Okay.
I can give you an example. We have KPIs, of course, in the area of decarbonization, of reducing the carbon emissions, in the area of producing or procuring renewable energy. And all these KPIs are very clearly and monthly monitored in order to see that we can reach them. Because, if you are looking to the Paris Agreement, we need to go with decarbonization of 50% by 2030, which there are only 6 years left there, and to become a net
But
net zero.
still the impact in P&L. What is the impact in P&L?
Okay,
This year, next year.
I believe that it is a green premium. And in our business, I'll say that this premium, you can see it in the rentals that we are having because there will be higher rents. In the higher occupancy level in our shopping malls, in the retention of our tenants, and ultimately this will be seen in the valuation of our properties. But I believe that on a medium and long term will be the brown discount, the fact that you are not doing something in this area will be with a much more material impact. I was talking with the banks and they told me that they are already having a specific category of assets, stranded assets, the ones that even if they are still useful, you can use them, economically they will lose their value because they are not meeting the criteria. And actually, not only the corporates needs to meet these criteria, also the banks, the investors needs to have the assets, the loans in their books
So
in a
the
green.
stick here is that on a medium to long term, your assets, because of their sustainability, low profile and sustainability, they might lose their value. And this is the stick, yeah. But there is also a carrot on top of the premium that you can get from renting, for example. There is a premium from the interest rates. From is there subsidies on any interest rates or special interest rates for ESG?
Of course, there are some improvements in the interest rates. I'll say that these are not very material, but it is very important that actually will have access to the capital. If you are not there, most probably in the near future, you will not have the
Okay,
access.
so it's like
So actually, your financing alternatives will
Okay.
be diminished. So if you want to have resources, and again,
so the
I'm
stick is bigger.
the real estate sector, which is highly intensive in capital, then you need to have a green financing framework. And just to give you an example, 60% of our debt is green debt. So we have 60% green debt of our total debt as of the end of
But
2020.
how you put the color on the debt? So
Uh,
is there different pages?
Yes,
I will explain it. First of all, a green debt is something that you declare from the beginning that it will be green. I mean, that means use of funds will be only for the purposes agreed in the
It will be
definition.
controlled and audited to be that
Exactly.
way.
On one hand. On the second, it's not enough just to declare it green. You have to keep track of all the expenses in a separate account in such a way that you can demonstrate always that this is a green usage. Then you have to report it because all the lenders which are lending you for green, they have to see it in the reports. So it's not just enough to declare it and that's it. You from
Yeah,
that moment you are green.
So, or even
It's a whole
printing on a
process.
green paper, yes.
It's a whole process. And on top of that, we, for example, IFC, as a supplier of money for most of the financial institutions, we have done in the last years more than in the last 2 years, for example, IFC in Romania, we lended almost more than $1 billion in total. 75% of that was green or blue financing. Blue
There
meaning
is blue, yeah.
blue meaning everything related to water. For
Okay.
example, from sustainable fishery to irrigation to water treatment to all things like that. But we are financing mainly banking institutions or non-banking financial institutions or clients, big clients like NEPI. And then we do trainings with banks, especially because they have to use the money in such a way that will remain the definition of green or blue or whatever. So we make special trainings with them in order to help them build the portfolio and keep the reports and keep the track of use of funds.
I'm going to Eleanor, and in this context, this is also a technological opportunity. You saw somebody take these as a technological opportunity in providing, I don't know, the audit of the green loans or
Yeah, absolutely. There's a whole kind of green tech industry emerging. So it's kind of similar to the reg tech industry that we saw that's now coming up. There's all kinds of technologies coming out, particularly in our area, to help with looking at sustainability standards. So there's the twin organization to the IASB, the International Accounting Standards Board. There's the ISSB, and that's sustainability standards. And these are coming in, and they're going to be looking at scope 3 emissions, which is to do with the net zero. And these are actually the emissions in your supply chain. So can you imagine trying to keep track of the emissions of your suppliers and then doing accounting off the back of it? So yeah, there's huge business to be had in ESG technology, and it's only going to grow.
But Adela, when you do take this kind of green loan, green funding, yeah, so the way in which you do it, so okay, I have a strategy, I'm going then to Citibank, one of the partners of Unchain, or and together with IFC, syndicalized, we want to take, I don't know, 100 million euro in a green loan, and then they are granting this money, and then they are auditing the use of funds for a long time.
Now, I can
Yeah.
explain the process. So first of all, you need to have in place a green financing framework. This green financing
This is mandatory in order to apply for a green.
Exactly.
Yeah.
Or if you
Yeah.
want to go and to have green bonds or green loans, and if we are talking about portfolio loans, not secured, so unsecured funding, we need to have this kind of a framework. And this framework actually is certified by with a second party opinion, normally by an ESG rating agency, that what you are putting in that green framework is compliant.
Okay, it's let's put it like very down to
Yes.
earth. It's like an ISO certification together with a strategy
Yeah,
done by some.
actually, it's very important to say what I mean. You need to be very transparent in this green financing framework. So you cannot just put there things. So first of all, you need to define what are your eligible assets for which you want to obtain the green financing. And here we are defining very precisely what are our assets. And I'll give the example of in NEPI, we defined those assets that have a BREEAM certificate. This is a certificate specifically for the real estate on the sustainability. And we had those assets that have the certification as very good and excellent. And where we were tracking the energy consumption, the resource consumption, and of course the greenhouse gas emissions. So
you
need to define what are your
you
assets.
invest first in this strategy, in this certification, and then the infrastructure to track all this just
Yes.
before
Yes.
being able to be landed green by
Yeah.
the banks. Yeah,
Don't
it's an investment.
You don't get the money if you don't have this money.
Yeah, Eleanor.
Yes, Lee, ask you a question, which was because you've mentioned the ESG ratings agencies a couple of times. And my understanding of it is that there's quite a lot of differentiation between the ESG ratings agencies. And when you look at things like standard credit ratings, the correlation between those rating agencies is like 80, 90%. And then if you look at ESG ratings, the correlation between the ESG rating agencies is very, very low. So how do you go about choosing the right ratings agency?
Yes, actually, at the very beginning, we worked with Sustainalytics. I believe that they are the biggest now in the market on in this ESG rating, and they rated us as an ESG, and also they were the one that certified our green financing framework that we issued in 2020. Definitely, they are separate things. We have actually other type of financing like revolving financing, and this one are linked to the sustainability rating, to the ESG rating given by Sustainalytics. But these are totally different loans than the ones that we have it as a green, labeled as green green bonds or green loans, and which are actually under this green financing framework. And it is very important that according to this green financing framework, and once we got the loan or the bonds, we need to report. We need to report on the allocation of the proceeds on our green assets. And also we need to report on an impact. We have also an impact report where we are also reporting the consumption of the electricity performance of the green portfolio versus the total portfolio. What is the carbon emission reduction of so there are a lot of data.
Indicators that you are on the right track.
Just to let you know that actually this green framework, we did it in 2020. We issued 1 billion bonds under this green framework, and also we have a loan with IFC under this green framework, green financing framework. And in June this year, we updated the green framework because it was already updated. So in 2 years, there are a lot of new regulations.
This is something that I wanted to touch upon because, you know, this ESG field is so complex that new ideas, somebody might use a new idea. So look, I don't know, doing for example, using electric cars for the fleet of your company. Like I know, for example, Vodafone had this and their ESG strategy. Might this year seem, I don't know, 110 out of 10, but for 2 years from now, because of the battery effects, it will be 5 out of 10. So how these things are moving, because we don't have a fixed framework.
I would say that the European Union started to issue a lot of regulations in this area. We have EU taxonomy. We have corporate sustainability reporting directive. We have corporate sustainability due diligence directive. So there are a lot of regulations that are currently in the market, and that companies with a certain number of employees, so that are the biggest one that have more than 500 employees, needs to report on this. So I would say that also the regulations are becoming more transparent and it's more standardized than it used to be. And just to give you an example, according to the new green financing framework that we issued this year, we already put more stringent criteria for our assets. If before we had then both very good and excellent certified, we just put it the excellent certification. So actually we increased our standards on this.
Let me, Eleanor.
It is a really complex area though, because there's over 550 different ESG regulations out there in the world at the moment. And yeah, the EU is doing a good job, and we've got the green bond standards that are coming through from the EU that were announced in February, but it's going to be voluntary. It's not a regulation. It's going to be voluntary. There's a lot happening, but it's super, super complex. And I think it is putting people off, to be honest.
And to make it even more complicated, green bonds are not the only ones. There are a number of other kind of bonds. For example, if a company, through their fundamental way of doing business, cannot be a green company, they will not be able to issue a green bond. But, for example, they can issue a sustainability linked bond or sustainable linked bond, which means instead of choosing only green KPIs, they can choose the other two S and G KPIs, which make the definition of sustainable linked bond. And then they can issue such a bond, which is
I don't know
another
if this
variety.
application helps, but what I'm trying right now
Just helps to scare it.
so what I'm trying right now to ask from you. So let's start from you, Christy, because as important and urgent.
Well, it's very easy. I mean, starting from the initial, let's say, reason why everybody started to think about that, the global warming, you heard about the 2 degrees target. If we go beyond that, there is no way
I
back.
don't know. There was an American president
Right,
not
right.
recognizing anything on this.
Right, but leaving that aside, the rest of the world believes that. So this is the reason why everybody should care about these things in general. So now, from now on, especially in EU, you will not be able to do business if you are not complying with all these regulations. So raising normal funds, which will be more and more difficult. So everybody should start preparing themselves, because as it was said before, you cannot start raising money unless you are prepared. So they should first start preparing and then start raising money.
Similar with open finance, one of my favorite favorite fields.
Okay, you managed to bring it to your favorite topics. Finally, great. So this is my advice. Not only that it's the right thing to do, but it's the only way to do it in the future.
The future, this is
exactly. And plus, as I said, it also pays off. It's not just a matter of additional, I don't know, trouble, but it's also pays off. It pays off.
And Adela, the same question. So I would like to have your take, because it's kind of the final take on this, so that we convince the financial managers not to look, superficial to this subject, because it is not a superficial. What would be your reason to put in front of them to consider it urgent and important?
I'm fully aligned with what Cristian mentioning, that there is regulatory, then is the access of the funding. As I mentioned, very, very soon, I don't think that the lenders will ignore this part. And actually, the liquidity is something that everyone is currently looking. So if you want to have access to the good funding, then you need to have the strategy. And maybe also I want to put a human touch, that we as a human beings, we want to let a legacy behind us. And here we are talking about leaving something for the future of the company where we are working on, for the society, and ultimately for the planet. So this will be
Yeah, and on that point about the human touch, I think it's about being able to attract young talent in the future to your organization, because I work quite closely with a treasurer at an HR recruitment company, and she's actually also become head of sustainability. And she says one of the main things that recruiters are looking for, or are being asked for, is organizations that have good ESG credentials. So to be attracting that future pipeline of talent, you need to be showing yourself as an organization, as a treasury function that's embracing ESG.
It's cool also to be ESG. You preserve your value, and also you don't have some fears that the liquidity channels that you have right now will stop at some point. That's the it's in a nutshell. This. Thank you very much for being here around me, and really, I'm really appreciating having this edition. And thank you, Eleanor, for being part of this as well. This will be it is recorded and will be sent to the community of CFO Talks. Thank you very much.